All right, let's send it over to CommSec now. Tom Piotrowski standing by for all the numbers this morning. What shape are we in this Friday morning, Tom?
Well, Pete, sadly, we're the victim of a pretty stark contrast between what we can expect locally. The futures are only pointing to a flat start, if at best, probably down slightly when we kick off. And as I say, this is a stark contrast to what we've seen in the Northern Hemispheres for stocks. We have got US and European markets in the neighbourhood of record highs again. Yesterday, we were speaking about the US Federal Reserve and its prediction boldly in some quarters that we could see 3 rate cuts between now and the end of the year. So that has obviously energised US stock markets, but equally in the European sphere, we've seen the possibility of a rate cut soon in the UK. And indeed, the Swiss National Bank has made a name for itself. It has been the first bank to kick off the rate cut cycle globally. They cut rates by 0.25% overnight. So we're in this moment, Pete, where the inflation fight appears to be in its final chapter. At least that's the interpretation taken by the markets, and that is lifting equity markets. The Dow Jones is up 0.75% as we speak. The S&P 500 up by around 0.4%. The Nasdaq is up by 1/3%. Another important benchmark that we talk about from time to time is the Philadelphia Semiconductor Index, which really is the narrow focus, if you like, of chip makers in particular, and that index is up by 2.3%. So US markets really carrying on from that euphoria yesterday, where in some spaces it was expected that the Fed could potentially wind back its expectation for rate cuts. The Aussie dollar's been pretty volatile in the last day after those super strong jobs numbers yesterday. It's pulled back from around 66.4 US cents at its highs in the last day to be around 65.7 as we speak right now.
Okay. Tom Piotrowski, thank you. Talk to you in a few hours.